What's going on, everyone? Bryant here. Welcome back to my YouTube channel. Today is Tuesday, November 17th, 2020. What we're looking at is a fresh chart of Beyond Meat, the ticker symbol BYND. It was an IPO last year and it was one of the successes of last year. It's currently at a very significant level, but using technical analysis, you guys will be able to see how you can build a big trade idea. This price action is up to date. I will be looking to build a bigger swing trade on it. It's also going to provide some really good intraday trades for some of you scalpers and stuff like that. Now, starting out with a very simple list of tools that's available to all traders, we'll be looking at support and resistance lines, some trend lines using the very important simple moving average such as the 200-day SMA, and then we're going to look at some supply and demand zones. Lastly, we're going to look into some more advanced stuff such as the Anchored VWAP, then volume profile and being able to read the point of control, and then lastly using options to see where the open interest is so we can get an idea of where Beyond could end up going this quarter. So let's jump right into it, and we'll start with the very common and basic tool available to all traders, which is a support or resistance line. I'm going to just start back here because as we can see, this was a significant level. It gapped up over it and it was the low before that gap. Adjusting my trend line, I'm just going to see if I want to, adjust it. I could just right click and press activate, and let's say I want to move it up to here. Why am I moving it up to here? Because I want to include the low of this day here. I think that's pretty significant. Also, we'll tweak it later if we have to, but there we go. We have a very basic support level. This was earnings and it gapped down into this level, which is also why I'm even talking about this video and why it's on watch for me. Next, let's jump into a tool that's available to all traders, no matter what platform you're using, and that is our trend lines. So I'm going to start with down here. I want to get as much touches on this trend line as possible. So using the wick here, the body of here, these two lows, I'm going to stretch this out, and I also want to include the highs from here. And let's see if we need to tweak this. Right click on this, activate. Let's just adjust that up and say that looks good to me. Again, it doesn't have to be exactly perfect, but that looks good. And why do I like this? Because if we zoom in, we can see we're getting nice touches of this trend line here, and if we scroll forward, we see we're getting a couple touches of it up there as well. Next, I'm going to make this a bolder trend line just because it's a very important one, and change the color because I want to know that it's coming from the daily time frame. And then lastly, I'm going to duplicate this and create a channel, because I want to have an idea for how high could Beyond end up going, and if it does get back into this channel. And I put it there because I like the touch from here, assuming I had it stretched. Let's adjust it real quick so you guys can see. Here we go. So I'm including the price action from here. It consolidated around this. It ended up being a peak here, consolidated around his before it broke down, hit the support line, and then it went back up, and this was the peak here. So that's a pretty significant channel to have. It's a channel because it's just a support trend line and a resistance trend line, and then it's trading in this channel. Next, I'll point out what's already on the chart. This gray line right here, it is a simple moving average, and as I said, it gapped down into this level, and as we can see, it's consolidating around it. The 200-day simple moving average on the daily time frame will probably be one of the most powerful basic level indicators you could have on your chart. So if we zoom out, we already have some nice simple technical analysis, and let's jump into a smaller time frame. Let's build out a demand zone. So I'm going to switch right over to my 4-hour time frame, and everyone has their own methods for creating their supply and demand zones. For the purposes of this video, I'm not looking to go too in depth with explaining every single thing which I'm doing, because some of my previous videos are very long where I go more in depth. I want this to just be a quick technical analysis overview. So using the way I like to draw my support resistance line, my supply and demand zones, I'm going to start by looking at the wicks on the 4-hour time frame, because that's where buying pressure was stronger than selling pressure, if that makes sense. And I'm looking at this wick here. I also want to know where was the last big short position or so. We can say they started building it here, it wicked up, it sold off, and then this is where it pushed through it, and XYZ, right? So I'm going to come here. I want to include this level. I definitely want to capture all this type of price action here. I'm just going to extend this out, and what we can see is the top of this level aligns with this, and this can be read as our demand zone. So I'm just going to change this to green, lower the opacity so it's not obnoxious. Press OK, and there we go. So now we have our demand zone on our chart. Does this start to look pretty good to you guys already? But we're not going to stop here. Let's add a little bit more technical analysis onto this, and let's go with something that's called the Anchored VWAP. Very powerful tool. Going back to the daily time frame, I want to anchor from the IPO. So switching over to TradingView, which you guys have access to the Anchored VWAP for free. I'll leave a link down in the description below so where you guys can sign up for TradingView. It's a great charting software. It's good sometimes to have a couple platforms that you use for charting just to get a fresh perspective on things. But this right here is the Anchored VWAP. I'm just going to anchor it from the IPO to get a general sense of where's the majority of shares that have been traded around since the IPO. And as you can see, it's in confluence with this level right here. Next, I'm going to add an Anchored VWAP from the year to date. So the year to date would be January 2nd, 2020 right here. This is when 2020 started. Let me just change the color of this for visual purposes, and we'll call it let's go with this one, make it purple, whatever. So we have double confluence right here, also showing that there's going to be a lot of interest for different types of traders in this area. So let's switch back over to Thinkorswim. And I'm going to put my Anchored VWAPs on here using a custom study. I'll leave a link in the description down below. Turning on the IPO anchor. Here we go. So that's the blue line. And now we're going to turn on the year-to-date anchor, which would be this right here. And there we go. So here's our green line. Here's the year-to-date. And then we can see more confluence building in this area, right? Next, let's add a very beginner-friendly study while we're at it, and that would be the RSI. I forgot to mention that at the beginning of this video, but I'll just turn this one on, and we'll see we have the RSI, which is currently at oversold levels. Also beautiful confluence. Now, one of my other favorite advanced studies that I like to use whenever I'm analyzing a chart is the volume profile, and I look for the point of control. So we'll switch back over to TradingView just because it's easier to set it up, and it's easier for most people that aren't familiar with Thinkorswim if you're international and so forth. So the volume profile is right here. Once you just go to indicators, you just press, I have it saved, but you can press it here, and that's the fixed range. That's the one I'm going to use because I want to choose where I want it to start from, which will be right here. I'm going to stretch it out to the current level, and this right here is our volume profile. And this right here is our point of control. So I'm going to take note of that red line. It's saying it's at 122, and we'll call it 122 and a quarter just to keep it simple. It looks like it's between 122.10 and 122.30, but I'm going to put it as 122 and a quarter to keep it nice and easy. Well, what do we have right here? We actually have this price level, so why not? Let's right click this and just change it here. The level was 122 and a quarter, it's 25. And I'm going to just change this because it's a little bit more important. I'll make it this bright blue, and I'll put this as the IPO POC, which is the IPO point of control. I want this to be written out so I know exactly what that level is there. So now look at how much confluence is already building at this level. That is something you really want to look for when you're building a bigger trade. It means there's a lot of participants around this level right now. Again, BYND is not even a company that's been out for more than 2 years. So this is pretty significant information to use. Now, I haven't necessarily dissected BYND from a fundamental standpoint, so I'm going to stay away from the fundamentals for now. But I do want to let you guys know earnings just happened. And the day of earnings, there was some news that came out that McDonald's was actually releasing a plant-based product or something like that, and BYND got crushed. And then later in the afternoon, it actually ran right back up because apparently I think BYND is the supplier, or they're helping McDonald's make this product. And then earnings came out and it gapped. So I already thought that was a little bit fishy, if you ask me, the way that PR came out. But let's put a level up here, and we'll call it 170 to make it nice and even. Not going to be too picky about these levels because it's just about these general ideas, right? So we have 170. Let's extend it to the left just to see if it has any significance. So it's pretty interesting over here. Also, we could keep it simple and just put out, I'll just do a vague supply zone, and we'll call this this area up here supply. Make it red. Why red? Because supply is representing the sellers. Lower the opacity, the same thing, so it's not too bright on our chart. And here we have our supply, we have our demand. So we're currently at demand, and we want to sell at supply, right? That's the way you should be trading. Now, before we jump into the smaller time frames and see how you can actually trade this, let's go to my favorite tool, which you guys know is the Fibonacci Retracement. Again, something I should have mentioned at the beginning of the video on my list, but I forgot. Right here would be the 2020 swing low, and let's go right up to the 2020 swing high, which would be right there. Wow, what do we have? The 50% retracement in confluence with the IPO point of control. in confluence, but before we knew where the point of control was, we already had this line drawn up. Not every trader has this many tools on their chart. Not everyone's using the RSI, not everyone's using, you know, the anchored VWAP, not everyone's using the Fibonacci retracement. Majority of traders should be using the 200-day SMA on the daily. That should be the only one there. But now we have one, 2, 3, 4, 5, 6, 7, 8. Like, I've lost track of how many confluences there are at this point. So let's just dive into the smaller time frames and see if we can spot anything. This is our 4-hour. If we come to this time frame now, zoom in, and we're going to draw out another Fibonacci retracement because I enter on my 50% pull-in. So from this swing low from earnings to this swing high, what do we have here? This 50% retracement lines up with here. Let's just adjust this Fibonacci real quick right there. That looks good. And let's dive into a smaller time frame. What do we have here? This would be the hourly time frame. We can see right here came this sort of spinning top candle right on top of this demand zone in confluence with everything else. But I would like to see what actually happened here. So let's zoom into the 30-minute time frame. Let's come here and see what we see. See if we see any wick rejections off this level, showing that the buyers are starting to step in. We have another spinning top. We had selling pressure starting to slow down before it reversed again in confluence with everything else. Let's go even closer and see what happened on the 15-minute time frame. If there's anything we need to adjust, we can maybe adjust this right here just to get it perfect if we want to get that exact top and make sure it's at the exact low. But I'm just nitpicking at this point. You guys get the idea. Let's go lastly to the 5-minute time frame and dial into that day. You guys see what happened here. It sold off. Massive volume came in the moment it touched this zone, and then it consolidated between the 50% retracement and the 61% retracement on the smaller time frame. That's the important thing to take note of. This is the 5-day 5-minute net chart, and this is the day after earnings, using that swing low to the most recent swing high. When I'm generally entering a trade, I'll use the 61 retracement as my stop, in case you're wondering. So if I took this trade, which I did not, I'm currently not in this trade. Again, I'm just going over it from a technical analysis standpoint. I am looking for a place to actually enter this trade. I saw it this day when it had just cracked back over VWAP, and I had these technical levels drawn out, but I'm still contemplating if I want to take the bigger trade, which would be the swing. It's beyond, so it's a little bit, it trades funny sometimes, so I'm still evaluating that. But the trade is not necessarily done because it has plenty of room to go, as well as it could still pull back into this level and provide another opportunity to go long. Or even better, it can pull all the way back down to 113 and change to potentially go long down there on a double bottom. We zoom into this day right here and we see it sold off, and you guys see how the volume came in right here in this candle. The moment it touched the demand zone in confluence with everything else, the selling pressure started slowing down and buyers started stepping up. This right here, guys, when you see a move like this, this is not retail traders doing this. This is an institution buying into the ask, which means they're marking prices up. This is an accumulation phase and this is a markup. It is essentially the start of what's creating this new uptrend. This uptrend is not an uptrend that can go for, you know, weeks on end. We're just talking about this short-term uptrend is what's happening right now. We can get confirmation of that if you weren't there to actually see the tape that day. A good way to check that, aside from looking at the volume, is you can use any sort of custom study that shows, you know, exactly where the orders were going into. This is a very popular one, available all over the place online. You can just search for, you know, a custom volume indicator for Thinkorswim that shows you which orders went into the bid, which went into the ask. But this is showing right here that majority of these orders went into the ask once the selling happened. And then at these levels, as the volume came in, you guys can see there was a lot of sell pressure here. Look how much red there was on these 5-minute candlesticks into the bid. And then we can see once that selling was done and we reached here, you guys can see how there was more buying pressure coming in. And then this was the last big sell pressure before we broke out of this consolidation zone. And you guys can see how much orders actually went into the ask. This was above average volume for BYND on the 5-minute time frame. And then you guys can see what happened. It ended up continuing into today. So if we just jump to the daily and we see where we're at now that we have a grasp on the full picture, We also have a gap right here because it did gap down, and then right here this would make it a gap fill. So if I just put that gray area in, this is a gap fill trade. If you're looking to scalp that on a break of this level or the next pull in, there's a trade to be made there. I do use these levels as my PTs whenever I'm taking an intraday or a short-term swing. But again, the level that I would like to see BYND get back up to, which I think it's headed, is about 170. If you guys want to see what actually happened on this day on an intraday time frame, let's pull that up on the 15-minute and zoom out. And this is what I was talking about when that PR news came out that about McDonald's. It dropped it, and then the news broke again. It went right back up, insane volume, and then earnings, and then it gapped down. This is all pretty fishy to me, and this is where I think it's heading. Now let's look at the options chain to see what's going on there. If we're looking at the January 15th expiration 2021 and we look at the open interest, which strikes are interesting, we have the 150, and if we look at the 170s, we can see that there's over 4,700 open interest and 6,000 on those two. Those would be the highest, and then next we have the 200s. So it's pretty interesting to take note of. The open interest might sometimes act as a magnet. On the put side, we have 6,000 open interest right here at 100, and then we also have 6,000 at 50. Whether someone is using it as a hedge, there's no real way for us to know, but it is something to take note of. So if we go back to the chart, and if we go and looking at the daily, my daily PTs using the fib would be 232, and then if it breaks the all-time high, I'm putting BYND at 289, call it 300 at that point. Something else to take note of is if we draw out the downtrend from the all-time high. This is the all-time high downtrend right here. Mark that out. Just make this thick also. I'll use this magenta color and let's go with thick there. We have that downtrend. If BYND cracks this supply zone, it might reach some resistance at about 190. However, if it breaks that, generally what I see is we have an all-time high break. So if we break that area, then we break 197, which would be this 52-week high. We have the channel resistance, which it might end up struggling with before it potentially pulls back down and retest this level, or it might break here, hit here, retest, and then continue up. If BYND is to actually end up putting in a new all-time high, again, that's going to be dependent on fundamentals and what they're doing. So hopefully this video helps provide some insight as to how you can really dissect a stock and actually come up with a key level of interest. The area to watch on BYND is 122.25, 122.50. Just call it between 120 and 123. I'll call it. If you can get a fill around there and you risk off of this low for a potential swing, I think that's a great trade. Even better if we get a double bottom, buyers start stepping in, you start getting some sort of confirmation. Really good trade setting up here. And then also, not to be biased, but if that does break, we do have a gap fill below this level here. So I'll actually just let's put that in so we're aware of that. We have from here to here, and that puts this PT at 102. At that point, the PT might as well be 100. So you guys can see there's a trade to the short side if it does break this level and it breaks this support right here, which would be 110, 109 and some change. You have a nice scalp. That's not the trade I'm looking for. I think that BYND will go back up here. Again, haven't looked into the fundamentals, but it's starting to pop up everywhere. It's in my neighborhood, it's in the grocery stores. A couple friends of mine that are meat lovers have tried the product, and I know the product is great. I myself personally have not tried it, but it's at the point where I can't ignore BYND anymore, so that's why I wanted to share this. If you guys have any questions, leave a comment down below. If you liked the video, make sure to give it a thumbs up, subscribe to the channel. Thanks for watching. See you guys in the next one. Peace.